Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over all the green on the charts, the massive pumps that we are seeing on the charts because of that Fed decision. I'll be going over some of the details of the Fed decision so that you can understand what's going on. And I would also like to congratulate the Alpha fam on our amazing trades yesterday. So if you did pick up the trades that we were talking about, then you should be doing extremely good. And of course, while the shorting option didn't even come into play, or may only be coming into play perhaps right now as we speak, because that bullish play did, far exceed expectations. The last two trades that we made have just been highly successful. So what do we see pumping here? Ape just going crazy. LDO again a big winner. ETC just, I think it's basically piggybacking on the Ethereum pumps, right? We have BTG. I don't really remember what that is. Bitcoin Gold. Okay, just a blast from the past there. We've just got a whole bunch of coins popping off. Of course, it is a mixed bag because the market is still trying to figure out how to price these things, right? It's not 100% clear, and also, we have to understand that a new day just opened up, and of course, a lot of pumping was at the end of the trading day yesterday, which ended basically this afternoon, which is why I'm making my video now because we wanted to see the daily close. And so, a lot of these coins actually did pump in the morning and the afternoon, and simply they're starting to retrace a little bit as the day goes forward. So this is actually a little bit more green than you'd think. And if you look at the stock market, you can just see how green things are. Of course, the market immediately decided to get risk back on after the Fed decision, and we'll go over why. But look at Google just popping 7%. Microsoft 6%, Apple 3%. I mean, these are gains that you see in crypto. You don't usually see these type of gains in stocks, and so this is just a brilliant coup for the bulls. However, it could be a little bit short-lived. So again, we'll want to have a little bit deeper analysis to understand, what's at play. And we will want to watch the market because, often after a big pump, you get a big retrace. So let's just see, okay? But congratulations again to anyone who was in the trade with me. You guys should be doing really well. Let's see. Yeah, the Fed actually did increase the interest rates by 75 basis points. Now, if we talk about, what Jerome Powell was saying, basically, he admitted that he did make a serious mistake in December with regard to being late to respond, or at least how he set expectations. And he admitted he misunderstood how markets would respond to the COVID reopenings, and that he was worried that the markets would get wrecked if he just pulled back too fast as they tried to pivot from reopening. Because again, like the Fed, basically is giving out all this free money, you suddenly yank the money back. And then if your company is trying to transition from, really bad situations to potentially really good situations, the reopening, then you might not have money to change your operations. And so, he basically admitted he made a huge mistake. He didn't calculate things properly. He didn't say sorry or anything, but he did mention that he understands what the problem was, and just it's just rare to have those moments, so just mentioning it. He did, in his perspective, say that he had front-loaded rate increases, which does suggest, we have to pay attention to these key words that they use. So the fact that he said that they were front-loading does suggest that they will perhaps not lower the rates, but not increase them as much in the future. And so that was a little kind of indicator to the market, maybe we can be a little extra bullish. And then he mentioned that they had reached what he believed is a neutral rate. So again, the market's thinking, he's saying it's neutral. So they front loaded it, which means that they're not going to increase on the back end, which means later on, right? So they're not going to increase so much later on. They basically have increased heavily in the beginning, so they're not going to do as much later on. And now he's also saying that they have achieved what he believes is close to a neutral rate. So that suggests that they're probably not going to have many increases, even if they do increase, like say in September or who knows, like December or whatever. Maybe it's just going to be a little bit more. That's about it. And that that he does see markets as softening and a recession is possible, but he doesn't think that we're in a recession right now for kind of technical reasons, and that we're just seeing a slowing in spending. And so that actually gives a little bit of confidence to markets who do look to these public officials for their opinions on whether we're in a recession or not. And a lot of people can debate whether you're redefining what a recession is, but there is no one fixed definition of that, to be honest. People like to just say that there is, but there isn't one fixed definition. There are actually multiple definitions of a recession is, and it makes sense from a certain perspective to say that if you had a whole bunch of artificial money in the system, that if you're just kind of clearing out that artificial money, that yeah, of course, market activity is going to go down, but it's basically a return to normal. It's not technically a recession, you're just getting back to normal. And then what happens is if you dip way beyond, or if you dip below what's normal, then you could say you're in a recession. But on the other hand, does that really matter to people if they feel like things are pulling back? From how we might feel, we feel that it's a recession. And also, you have to understand that some of these indicators that the Fed has and how these things are measured are kind of lagging. So even if they say that they're not measuring the recession, by their, standards of overheating coming back to like normalization, then that still could be delayed and we could still technically be in a real recession. It's just that they haven't measured it properly yet, right? So, but the key point here, I'm not trying to make the debate for one side or the other side. I'm just saying that markets responded well to that messaging because markets like to hear that we're not in that serious of a recession and that these public officials, don't believe that we are in a serious recession situation, because that means that they have more freedom. That means the market has more freedom to be a little bit more bullish, as opposed to if, officials came out and were like, screaming, "Oh no, we're in recession," right? Like that would freak out the market. And so this does comfort the markets just a little bit, right? I understand that's politics, but again, from the Fed's perspective, they're just correcting hyper growth from money printing and from the effects of the energy and food markets from Russia's war on Ukraine and the supply chain tightening in China from their like crazy authoritarian lockdowns and all that stuff that still constrict supply chains. And then they're just kind of like a downplaying their part in real monetary policy. But hey, that's politics for you. Let's see. They are still concerned that we could have a real recession, so it's not like they're in la la land. They still do have their standard for what a real recession is, and they believe that we're not there, basically because the labor market is still pretty high, right? And demand is still too high to fully correct for the inflation that was caused by the loose monetary policies in the COVID era. And so the Fed will likely continue to increase rates most likely, but future increases are likely to be smaller than what a lot of the people who are kind of screaming about this stuff, kind of panicking about that stuff, are thinking, right? We didn't have the 100 basis points increase today. We had the 75 basis points one, and they may be smaller in the future, which makes, again, like markets feel a little bit more comfortable, right? Just a keynote, however, they do not limit their options, right? So even though this meeting felt dovish, the Fed does expect markets to continue to behave and be responsive. And if markets do not do that, then they don't say that they won't increase by 100 basis points in September if need be. So basically, we can't really expect like all-time highs or anything to come out of this news. But if there is a little bit of a rally, okay. But just watch out in September, and we better be on our best behavior as markets and not just go crazy, which means that trading isn't going to be, just wild, most likely, but it may be a little bit tempered down for a while, okay? And who knows, the markets really haven't likely priced in the Q2, the quarter two earnings fully, the possibility of pullbacks. Of course, we're going to see, what Apple and all these other guys, what their earnings are. We still haven't seen all of the earnings reports, so there still could be bad news that brings the market down a little bit, or perhaps to its previous low. And the markets may actually have to reevaluate where that bottom is if Q3 ends up being impacted by a huge recession, right? And so Q3, basically September and maybe even December or even the first quarter of 2023 could end up being the bottom of the market. And we may just kind of be fooling ourselves right now to thinking that we're at the bottom. We may be at a temporary bottom for a relief rally, and this market may just go sideways, or it may actually find a new low later on. And it's just we don't know yet. We don't know how the world is going to be in 6 months. And the Fed can't predict that, and you can't predict that, and I can't predict that. We're going to have to see what happens, right? And unfortunately, if it does continue in its current direction, most likely there will be a serious recession, and so maybe the bottom of the market comes, again, Q3 to Q1 next year. And we just have to take it basically quarter by quarter. Every 3 months we have to reevaluate. The Fed still does expect significant job losses to come. And by the way, guys, something that you may have missed is that the Fed predicts it could take 2 to 2.5 years for balance sheets to reach equilibrium. And what this means basically is don't get too excited that we are going to just like fly out of a bear market. It could take 2 to 2.5 years before all these policies really get back into a place where we start to be able to just turn on the money machine again and maybe have another bull run. So the Fed's expectation is that we don't reach equilibrium where we can start doing crazy things like that for probably another 2 to 2.5 years, right? And that makes sense. If you think about the bear market from 2017 to basically 2020, it basically was 3 years, right? So just uh, just consider this stuff, guys. Again, we have to continue to be serious as a market. Like we can't just be wild moon boys, and the Fed is also going to continue to be serious. If the market starts getting too exuberant again, they will continue to be serious and get inflation down if markets don't behave. And so, just to bottom line this stuff, the price of, I mean, the markets are going up right now because part of the market had priced in 100 basis points increase, but the Fed only increased by 75 basis points. So this is relatively better, but it's not good for the markets. You understand? We still got increased by 75 basis points, which is a huge, massive increase and will, in fact, contract the economy, which means that earnings for quarter three will likely come down a bit, right? However, the long-term plans for the Fed are kind of the key point. It's not really the 75 basis points today. It's more about how long they expect to be increasing and how intensely they expect to be increasing over time. Everyone and their grandmother is talking about basis points, and so that's old news, right? Now we're talking about the recession, and again, like all these, scumbags in, crypto Twitter and the gurus and the weirdos out there on YouTube who finally started to talk about interest rates after we've been talking about it for 9 months here. They're acting like they know what they're talking about, and they don't. They literally just added it to their speeches like within this last month, way too late to help their people. They were saying the bottom of the market was every drop down, right? They totally wrecked their people, right? So again, everybody's grandmother is talking about interest rates hikes and all these basis points and things, but that's old news. And so what controls price now is how deep is the recession going to be, what are quarter three earnings going to be like, and how long the Fed will continue to keep rates going until it eventually pivots, probably in 2023, in my opinion, and then early 2023, most likely, and then of course it could be another 2 years to 2.5 years before they're able to fully pivot and go into kind of expansion mode and try to heat up the economy again. But we never know, right? There could be some type of crisis or something, and they may just be forced to do something, and then the world doesn't stop, right? History doesn't stop. So let's move on from that. I hope that helped your understanding. If you like this content, feel free to leave a like. Let's see. Guys, again, like these are the earnings reports that we can expect to be coming out. Of course, we did, get like Google and, Amazon is coming up and, just a few of these. Let me see if I can just reload that in case anything. Nope. So you can see we're not done yet, guys. We still have the 28th, and there's just a bunch coming out on the 28th, and it's not over. The market can still react negatively if some of these earning reports come out really bad. So what I'd like to talk about is, for example, Walmart really missed expectations. Is Amazon going to significantly miss expectations, right? Best Buy, right, electronics, store chain really missed expectations. Guys, this is suggesting very serious outcomes in the economy in the long run. And what you could end up seeing later on is effectively that Q3 is going to be worse than what is expected, and the market might just end up bottoming again, you know, um, at the end of the year. So again, like always, be taking your profits, right? Put food on your table. Don't just collect the coins. A lot of people, even if we have a just a mini bull rally in the middle of a bear market, a relief rally, they're going to like tell you to just like hodl everything. Guys, just take your profits. Whenever you can take your profits, take your profits, right? I mean, this isn't financial advice; it's just life advice. Um, unless you know exactly what you're going to do with a coin, like how you can use it in your real world, how your children can eat those coins, right? Then always be selling, right? Always be taking your profits and make sure that in case we have just a global financial crisis, just comes about in 2023 or something, right? In case we have a war with China or with Russia or something, that you have 9 months, right? 12 months of savings available just in case the worst happens. And so take those profits and put them into your savings. And of course, you can be trading with a certain percent of your portfolio, but just be reasonable and understand the era that we're in. And of course, who knows? We could skyrocket, but it's better that you paid yourself along the way, right? Rather than just holding, and if we just randomly dump, okay, without proper risk management, you could get really screwed. I'm just talking to the new guys. I know you guys who are experienced, you guys know this stuff, but just always have to remind the new guys about this stuff. Okay, if we go over to the charts, I mean, again, like I just want to congratulate you guys. Like we have just done so great. Remember up here, I was talking about the Alpha 9 knockdown, right? That a crossing of the EMAs on the weekly, where we did have that. Just put on our EMAs. We did have that cross of the 9 EMA and the 10 MA. And what did it do? It resulted in it's approximately 10 to 30% drawdown. We ended up pulling back 15%. So right there in the middle of the expectation. And so that was a cue for us to just understand that we could be going down further. And then once we reached kind of a bottom, and people say, oh, how do you know it's the bottom? Of course, we have support and resistance and all that stuff, right? Of course, we use that stuff too. But guys, did you notice it conformed perfectly to our curve? And what was I suggesting? That we had to bounce right here. We were only halfway down this fall. I said we were going to have to bounce right here. And then most likely we're going to pump up to the, to the top of this kind of wedge. We don't know the exact shape of this wedge yet, right? Could be something like this, right? Something like this. We don't know if this is topped out. So it's how it's pointing exactly. The wedge isn't the point. The curve is the point. And I said if we had significantly broken this curve, that you should be ready to sell because most likely we were going to test the bottom of the range or even break below, just like we did here, just like we did here, just like we did here, right? At 60K. And so these curves have been just reliable time and time again, except for this little flash wick right here. But even during the summer of 2021, boom, 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 those points on the bottom of the market aligned perfectly with a curve, a kind of teardrop, and using that in combination with a kind of jerry-rigged wedge, not a real wedge, just kind of like a forced wedge, basically. We just get little standards for ourselves of where we can be ready to get out and then where we can define a possible breakdown. Because as you can see, while you can manipulate the wedge as much as you want, um, if you move the curve, it starts breaking its connection points elsewhere, right? And so just if you're just using this as a standard for entry or exit or whatnot, then there is validity here because it helps you time yourself. It's a little bit arbitrary. It's not traditional TA or anything, but it did work. And not only did it work, it worked extremely well. So not only did we get that, 10 to 30% dump here, but then I suggested we would likely, very likely, get supported at this teardrop, and that we would probably bounce up, and that maybe we could, hit the top of the wedge. So wherever this forms a top, then we define that, the top of the wedge, and we're going to need to break on top of that wedge if we're going to continue bullish. Again, we have to see where does it really top out at. I'm not 100% sure it's done topping yet. Looks like it's starting to turn around. But if it does turn around and we break this teardrop, then again, guys, like using a combination of the wedge and the teardrop, you can understand that if we break this, most likely we're going to be testing the bottom of the range or even breaking down again, which is possible because this was a very massive increase in interest rates on the market. And if earnings reports on some key companies like Amazon or whatnot come in bad, then there could be a negative response in the markets, especially as the markets have these gaps that they need to fill down here. And so I'm not sure that this is the bottom line. I'm not sure that we're just going to pump a vertical. Maybe we come down, we fill these gaps, and then pump up. There's no straight lines in trading, guys. But again, like we just did a great job, guys. So yeah. I mean, look, where did we enter? We entered here. We entered here, right? We took profit, right? We took profit here, right? We took profit here. We took profit here, and then we had a stretch goal, right, for 24,000, which we never reached on this one. And then I mentioned probably we'll need to short around this $22,000 area. And so we got this, right? I mean, I didn't really claim it as a short, but if you had taken it as a short, then that was kind of just a bonus. And then when we caught our support here, right? We again had the same trade, and again the 24,000 ended up playing out, perfectly, just perfectly. And I was super scared here, so I didn't take this, I didn't suggest this short. I was super scared. I wasn't 100% sure what the market was going to do. A lot of weird things were going on in the markets. There was a lot of FUD, KuCoin, Coinbase, the earnings reports, all this stuff was coming out, and just it was very, you know, the best thing to do, in my opinion, was just, and we were getting close to the end of this formation. So personally, I was just, I'm just going to pause my trades, right? We had gotten three key take profit points, and if we reached 24, again, we would have taken the rest of our profit, which we fully were able to do even after buying more back in. And then, of course, I mentioned, around here that we had that Alpha 9 knockdown crossing, which then sent us down 15%. I mentioned that we had this diagonal support, and that this would, and then for Trading Tuesday yesterday, I suggested buying in here. Literally right here is where we bought in. I just expected, even if the Fed had just like neutral news, I expected that we would at least pull up to this area, right? And so this is the profit that I had suggested that we could get, right? And of course, for your altcoins, it might be significantly more. But for this one, it ended up being a 10% pump, guys, 10% pump. And so this was just wildly successful, just a wildly successful trade. Of course, if we had met resistance, that would also have been a point to short, but we just never met resistance. We just literally went straight up. So you obviously don't sell while you're still going straight up. But again, like this isn't a financial advice channel. The only thing I can do is tell you like what setups I'm going after, and I just said if we had met resistance, it would likely to be a point where you could short if you wanted to. Looks like we might be approaching an area like that, but we'll have to find out. I'm not going to make a call right here. Um, the market is still absorbing the information from the Fed. And so tomorrow we'll probably find out how markets really react. Now, the point that I was suggesting to short was actually wherever Ethereum meets resistance. And I thought Ethereum would meet resistance here, but it was so bullish. The market was just so bullish. It just pumped the top of its channel, and it's actually reclaiming some of these areas that we need to reclaim in order to have continuation bullishness. So yeah, bullish ETH. I mean, go back to my video a couple days ago, just a bullish ETH. I labeled it bullish ETH because this was expected. Like I knew we were gonna have a pullback like this. I thought we would fill in the CME gap. That does suggest because Ethereum CME gap wasn't filled, right? The markets front ran it. It used it almost as like a support. But let's see. This is technically a lower high here than right here. So if we do get rejected, perhaps we do come down again and then fill in this gap, just like maybe the stock market comes down, fills in their gaps eventually, and then maybe we have a little bit more of a run. Not sure yet. We do have to wait and see. Again, if we go over to Bitcoin, like you can see, like that is a very typical thing to kind of happen where we have these pumps to the top of the wedge, all the way down, meet that kind of a teardrop, pump up to the top of the wedge, all the way down, maybe even do it again, and then chop it out, and then we choose our direction, either up or down, right? So I'm thinking that we might do the same thing, but the market is going to choose the upward direction if it doesn't break out of this teardrop to the downside. So um, there is the possibility for the relief rally to start coming up. Okay, guys, but don't be surprised if we do, break down to this teardrop and even to the bottom of our range, right? As Ethereum or stocks maybe try to fill in some gaps, before we continue to pump. So it's going to be a little bit choppy. It's going to be a little bit dicey coming up. And just be aware that volatility is going to continue to be interesting. Okay. Now we do see that that the VIX, although it attempted to hold on to that higher level, it did lose it again, and so we are entering again like good trading conditions. If we go over to the dollar, we can probably see the dollar responding in some way to the Fed. Yep. So you see the dollar just dropped, right? Just dropped. But we did see it do that before, and eventually it finds its footing and turns around. So we're all going to be watching to see when does the dollar decide to turn around. And you can see the slope that the dollar's on. Like it can just go at any time. So we shouldn't be surprised if this thing just suddenly bounces. And I think if we use kind of like a curve, right? If we use a curve instead of a straight line, we could probably see it conforming more to a curve. Yeah, yeah. So it's responding more to a speed in a curve that is speeding up than it is to just a trend line. So that actually suggests that there is the chance that this dollar could turn around at almost any time. Assuming that we don't break under this level here. Yeah, it's hard to get these curves to align perfectly, but this looks about right. Looks about right. And let's just step back a little bit and just see how that's happening, where you could see it like almost going parabolic, right? You can see it almost going parabolic. Yeah, maybe I can even bring it down here. Maybe that's what I'm missing, to be honest. Yeah, it's doing something like this. Look at that. It's almost going vertical now. Like this is the craziest thing. And if you think, so that's why like you can't just like draw a trend line, right? You can't just draw like these straight lines and stuff. Like you have to also think in curves. And you've seen the dollar do this before, right? You've seen it do it before. It just goes like kind of parabolic. Just does this weird like just vertical skyrocket. And so it can do it again, right? It can continue to do this, and until it breaks this curve, right? Until it breaks this curve, we're just not that confident that the dollar is going to give us relief. It could just bounce straight up from here. Now, if we do just use kind of a diagonal, you can see that we kind of have this kind of like fuzzy gray area. And so we'll want to see if it either bounces off of that or if it breaks under. If it breaks under this dashed line, then that's really good news. As long as we're between the curve and the dashed line, it could just pump, right? If it just wants to, it could just pump the way that it does. And as long as it's above the curve, like it's really dangerous for us. Like the dollar could just go off at any time. But as for today, it is dropping. And so that is good news for the markets that are trying to trade, at least until it turns around, right? Let's just finally check USDT just to see, like, yeah, people are spending their money, right? They're spending their USDT. We had that pump, came up to the trend line, kind of grabbed it, and then, as is usually the case, if you just get a little bit of price action underneath or over one of these trend lines, there's a high possibility that you can still flip, right? And so, it doesn't matter if you draw it like, I mean, like if you just tried to like include all of the wicks, like you're gonna have like these crazy lines, right? Like this wick and this wick, like you can't draw that across, so you're gonna have to like cut through something, right? So you cut through the wicks and then you have this trend line, that makes sense. Or you can cut off the kind of consolidation at the bottoms and the tops of the moves and kind of get an estimate. But that basically just forms your zone, right? It just forms your kind of zone that you have there. And so you can see that we did have this kind of like this kind of fuzzy, bouncy area where we bounced here at the top of it, we bounced here at the bottom of it, bounced here at the bottom of it, got here rejected at the top of it, and then we poked up to the top of it, right? Basically, we poked up to the top of it and then came back down. And so this was just kind of the fuzzy zone that we were retesting, and then we came back down. And then again, like we're probably going to continue down into this green area that I have been suggesting for a couple weeks now. And so that means that it's going to be good trading, assuming that we don't get reflected off of this level of 6.2-ish, right? Which we aren't hitting precisely yet. It looks like we front ran that pump, but it could work its way down after perhaps retesting this candle. This does suggest, some type of retracements in the market may be necessary just for the health of the market. And if we go to Bitcoin, you can probably see this, where this candle may need to be retested because it's just so thin. It's just such a massive pump that the market may need to retest the majority of it. So basically, retest this breakout on the bull flag. And again, like that's another thing that I want to point out. We did break above the bull flag. We did secure that $23,000 area. We do have, recaptured 12-hour momentum. We basically crossed the RSI, to the upside. In order to have RSI continuation and for the Stokes to continue to be pushed up on a daily basis, we do have to secure 23,000 still. And if we want a long-term bullishness, we need to get over 23,200. So if we secure this area, I'm going to be super bullish that this thing is going to just continue up. All right, like maybe that's too big of a circle. But if we can just capture this area and hold it, then I would suggest that we're probably going to continue in an upward direction. But if we retrace this candle, which is likely, then we're going to get underneath a lot of these things, and so it's just going to be 50-50. And the level that we don't want to break is 20,700. And then we really, really don't want to break 20,300 because we would come down. So again, like this is our previous low here at 20,700. We don't want to make a lower low, right? That makes sense, I think. I think you understand. And we definitely don't want to break 20,300 because we're going to cross our MACD to the downside. And so momentum is going to be the downside and probably just continue that way to the bottom of the range. So that's what we're going to be on the lookout for, okay, guys? Like we're going to be looking out for, can we secure 23,000 and hold it solidly above 23,200, or are we retesting like 20,700, 21,200 and getting pretty weak? And if we break 20,365, are we going to go down? So again, I'm not giving trade setups here. I'm just suggesting like this is serious areas to watch here. Don't know why I'm using that. And some type of a pullback, if it's just in the middle of this range, right, and if it doesn't really violate our support down here, then it could probably just be like a buy-in point, right? Pullback, because we're probably going to keep our momentum, especially if we can stay above this 22,000, let's say 22,200. If we're able to stay above 22,200, then we're gonna, hold on to, basically our daily RSI, our 12-hour MACD, our daily MACD. Like we are going to hold on to that momentum to the upside if we can stay above 22,000 over the next day. And so that would be a good indicator that we're going to continue to the upside. Additionally, if we stay above this 22,800, we're going to hold on to our 200 MA, which we're currently below, but that's okay. Like we could retrace this candle, bounce off of the top of this kind of bull flag, hold on to our momentum, and then recapture the 200 MA, if we don't end up breaking down. So again, like that's the current setup. I don't think I need to go over too much other things. Of course, there have been a bunch of coins just pumping, and they're all pretty much going to be doing the same thing. Let's just see. Let's see what Solana looks like. Yeah, oh, wow, that looks much weaker than Bitcoin, to be honest. So, not everything is joining in the party. Let me look at ETH. Yeah, look how bullish ETH is postured. And then look at Solana and just like, like what's it doing, right? Didn't break down here. What type of a pump did we get off of this though? Nice 15% pump. So perhaps it was just, I don't know. But everything seems to be going. A lot of green on the charts. And just not everything is priced in yet. So yeah, just watch this space. I think a lot of the coins are still expecting some type of a pullback, okay? We do have green, but we also have a lot of red on the charts, so it is pretty mixed. Let's go to the old KuCoin list and just see how this random sampling works out. Yeah, not everything is joining in the party yet, so you still have a lot of time. Still have a lot of time to get into positions and to look at what's out there if the market decides to be bullish. And don't feel rushed. Don't feel like anybody's pressuring you that you have to get in the absolute bottom or you're gonna miss the pump, all that stuff. Like just to be very careful. This market does have a tendency to put in these type of formations, get a little extra pump, and then dive down to hell. Okay? I just want to be very, very clear about it. Like, we really have to maintain those areas that I was pointing out to you in order for the market to maintain bullishness. And if we don't maintain those areas, just watch out because you know what can happen. You know what can happen on these kind of formations, right? We've just seen it, over and over again. We get that drop, and then we get a chop, and then we get another drop, right? Drop, some chop, right? And then we get another drop. Is that what's going to happen? So just stay on your toes, right? Stay on your toes. This market is not very forgiving. And we need to maintain, again, we need to maintain 22,000 let's just say 22,000. We need to tightly secure above 22,000. And to be honest, I only feel really comfortable if we've secured 23,000. Okay, tightly, like not just loosely, right? Otherwise, this stuff could just break down, guys. And that was Bitcoin. And for ETH, I mean, ETH is doing a good job. So yeah, I would just say 1550. If we're over $1,550, we're in really good shape. And if we're over $1,600, $1,600, then we're in excellent shape. Okay, so and we are like that's where we are. Now, just don't be surprised if any of this comes down to fill in that CME gap. Okay, like this isn't a call. The drop was the call. I didn't know where we were going to bottom exactly. I just suggested we might fill in the gap. I have no idea why they didn't fill in the gap. They went for it, but bulls just prevented them. So maybe there will be a second attempt to fill in this gap. And same thing is on stocks. Stocks also came down, but they didn't fill in their gaps. And why? I don't know why. So maybe they expect we're going to come down again, right? These are things you can be thinking about. But we're going to find out. We're going to find out soon. And again, those levels for Ethereum, 1550, 1600, you're looking pretty good. You're going to be losing your daily momentum under 12,070. Sorry, 1270. So you don't want to get under 1270. But anywhere in there, you're just kind of playing around, potentially a pullback to buy back into the market, right? And we're going to maintain our weekly 200 MA on Ethereum as long as we're above 1224. So pretty good. Like we don't want to break down from those numbers though. Okay. Otherwise, we're testing the bottom of the range again. All right, guys. That was your alpha for the day. Stay safe. Congratulations on the great trades. I mean, we have made. So there's the two trades in the last couple days. We didn't really get the short, but that might be coming up, right? It looks like we're getting a little bit toppy. We're gonna have to find out. I'm not gonna call this one, so I'll just cancel the short call. It was only meant when we turn it around. I'm not 100% confident. I have no idea what the market is going to do right now, and I think it's going to be stocks driven, and I haven't fully analyzed stocks yet. So I'm just chilling, taking our profit, going to be taking profits on the massive pump that we got. We did get the pullback, which was based upon the Alpha 9 knockout, right? We got that one, that short. And we also got the 4 take profit points before that. So that's 6 trades, out of the last, basically 6 calls. And you can count it 8 calls, but I've canceled 2 of them, right? So, uh, it's okay to cancel stuff. You don't have to always be trading. You can decide conditions don't make you confident, right? But we're doing really well. And so I hope to keep this up. And in the future, as I get a little bit of a better system going, maybe we'll start to track this stuff and be a little bit even more accountable for it. And then I'll also try to emphasize risk management a little bit more. But until then, just remember none of this is financial advice. I'm just practicing to improve my own skills. This is, of course, a continuous learner channel. This is not meant to be, your free university education or anything like that. This is me trying to be a better trader, you know, and I'm basically here talking to myself. And I just, I'm glad if anyone else can join me on that journey. So any advice that I give is really me talking to myself and kind of talking myself into how I should be thinking about the market. And just always take it with a grain of salt. Don't just rely on anything that I say, but also make sure you're doing your own independent thinking and learning apart from it, because I could be wrong, and I have been wrong, right? Um, a couple of the trades that I made are mistakes, and although in the last couple weeks we're lucky that it ended up working out correctly, maybe technically I was off a little bit, right? And so we can always be improving, always be learning, always take your profits, right? And All right, guys, stay safe and happy trading.